The Federal Reserve have reaffirmed their plan to start reducing bond buying. The decision has left investors on tenterhooks, as the timing of the tapering is still unknown. I'm joined on the line by Michael Gregory, Senior Economist at BMO Capital Markets in Toronto. So Michael, do you think we will see tapering in September, and how aggressive do you expect it to be?
Well, our base case still is that they will announce the decision on September 18th to begin the smaller purchases at the beginning of October. Keep in mind that at the end of every month they announce the purchase schedule for the full month ahead. So in September 18th, they'll still be operating under the old purchase schedule, and I believe that they wouldn't just change it right away. They would just, at the end of September, they'll introduce a new purchase schedule which will have lower amounts. So there's a little bit of ambiguity when you talk probably to people. Is the announcement take place in September, or is the actual cuts start in September? If you push people, they may clarify that a bit. But anyway, so our view is yes, September they'll get an announcement to begin in early October, and we think they'll cut about $25 to $30 billion from the 85 that they're currently doing, proportionately across both MBS and Treasuries.
The reaction of the markets reflected the confusion of investors as stocks dropped further immediately after the release of the minutes, then moved higher and then tumbled again. We also saw the dollar gain and yields on 10-year Treasury notes rise to 2.85%. So Michael, what are your thoughts on the market's reaction, and how do you see them performing after Jackson Hole?
Well, I mean, firstly on the reaction, it did seem that there really wasn't a lot of new information, really, when you think about the minutes. That the Fed is still on its schedule to begin tapering sometime this year. We happen to think that the announcement will be made at the FOMC meetings that are followed by a press conference, which means it's either going to be September or it's December. And I think the reason why the market got a little bit things sold off a little bit was because despite the fact the Fed is a little bit concerned about momentum in the economy. That was clear with a more dovish tone to the statement on July 31st, but moreover, you saw it in the minutes themselves, where several participants were talking about, over the past month, the economy looked like it's lost a little bit of momentum. But it does look like that's not enough to deter the fact that tapering will start in September. At least that's the perception of the market. If anything, maybe the tapering will be a little bit less than what was initially thought because of the weak economy, but it won't stop it. And I think the fact that it looks like the sluggish or the less than robust economic numbers, rather than stopping the tapering from happening, is only going to reduce the degree of it. And I think it's that realization, quite frankly, that caused the market to react a bit negatively to the announcement. What was clear from the minutes was that yes, we're on schedule for September. It's all data dependent. If the data perks up between now and then over the next month, particularly the payroll numbers, if we start to see another 200,000 plus print, then I think we're on schedule for a September announcement, and the cuts cut by a third, which is the 25 to 30 in terms of our view. If the data is somewhat lackluster, like we've seen over the past several weeks, then I think the tapering will continue, but by a smaller amount. And if the data actually continues to weaken off, I think then they'll probably postpone, not do anything in September, and maybe wait until December. So bottom line is rather than watching the Fed, I think everybody's going to be watching the data over the next month, and that's going to be the critical thing that's going to drive volatility in markets. Strong data is going to be bad for market performance because it just increases the odds of a significant degree of tapering. Of course, weak data, of course, does the opposite.
And finally, Michael, who are you putting your money on to be the next chairman of the Fed? Janet Yellen or Larry Summers?
You know what? Let me get my coin out here a second. Here, it's up in the air. Actually, to be honest with you, I'm not sure which is the one. I mean, the path of least resistance from a policy perspective is probably Yellen. So I'd give slight odds to that. First woman, first vice chair to become, the chair. So all of this is very positive. considering that two of the governors are leaving anyway, two women governors are leaving. One's got nominated for a Treasury Secretary, a Deputy Treasury Secretary position, and the other one's resigning. So, that would raise the stature of women, I suppose, from that perspective. But I give slight odds. But to be honest with you, I think it's too close to call, and I think the administration itself is not completely comfortable with either candidate. And the reason why I sense that is because, number one, they also introduced a third candidate, Don Cohn, right? So Obama himself introduced a third number. And why do you introduce a third person if you're not completely comfortable with the other two? Secondly, and this was out of the Washington Post, they were suggesting that the entourages of both Yellen and Summers are engaged quite actively in lobbying, to win over the hearts and the minds of the administration and probably the Senate as well. So I don't think any one candidate is like a layup, or sorry, I didn't use a basketball metaphor. I mean, I don't think anyone has a lock on it, and I think it's pretty close. So when I kind of jokingly said I was flipping a coin, I think that's the way I would probably do it at this stage anyway.
Thanks, Michael, and thank you for watching Dukascopy TV. Well, viewers, if you are interested in hearing about some Eurozone news, then make sure you tune into Monica Gibson's interview on Eurozone Flash PMI. Have a great day.